Hello and welcome back to Cryptic Finance. In this video, we'll be discussing different assets that are available in the stock market. The stock market can seem intimidating at first, but it's actually a very powerful tool for building wealth. Whether you're a beginner or an experienced investor, understanding the different assets that are available to you is an important step in creating a successful investment strategy. Are you new to investing and not sure where to start? Or are you an experienced investor looking to diversify your portfolio? Either way, understanding the various assets that are available to you is key to building a successful investment strategy. From stocks and bonds to mutual funds and beyond, the stock market offers a wide range of options for investors of all levels. So let's dive in and take a closer look at these assets and how they can work for you. We've got a lot of exciting things in store for subscribers. Join the fun by hitting the subscribe button. Hey, you didn't click the button. There you go. Thank me later. Let's start with index funds. Have you heard of index funds? They're like a basket of stocks. Instead of trying to pick one stock that will do well, you're buying a bunch of stocks with one asset. They're a type of investment that tracks the performance of a specific market index, like the S&P 500. The idea is to provide investors with a low-cost, diversified portfolio that mirrors the overall market. Index funds are a great way to get exposure to a wide range of companies and sectors without having to pick and choose individual stocks. Plus, they tend to have lower fees than actively managed funds, so you can keep more of your money working for you. The most popular funds in the US is the VOO, which tracks the S&P 500. There are many others as well. Here are a few more: SPY, IVV, VTI, VT, VXUS. Number 2, growth stocks. What are growth stocks? These are stocks and companies that are expected to experience faster than average growth in the future. They're usually in industries that are expanding rapidly, like technology or healthcare. The idea is to buy growth stocks when they're still relatively small and hold on to them as they grow and become more successful. The downside is that growth stocks can be riskier than other types of stocks, since they're more reliant on future earnings rather than current dividends. But if you're willing to take on a little more risk, growth stocks can potentially provide a big payoff. Here's some examples. I'm sure you've heard of these companies before, like Tesla, Apple, and Microsoft. Number 3, dividend stocks. Dividend stocks are companies that use their earnings to pay their shareholders a reward a few times a year. Have you ever heard of dividend stocks? These are stocks and companies that pay out a portion of their profits to shareholders in the form of dividends. Dividend stocks are a great way to generate passive income from your investments, since you can receive regular payments just for owning the stock. They can also provide a sense of stability, since companies that pay dividends are often more established and financially stable. Plus, dividend payments can increase over time, providing a potential boost to your overall returns. Just be sure not to get enticed by the dividend yield alone. Pay attention to the payout ratio, dividend growth, and fundamentals. Here's some examples: Procter & Gamble, AbbVie Inc., Johnson & Johnson, and Coca-Cola. Number 4, crypto. Maybe you haven't heard about cryptocurrency. It's a digital or virtual currency that uses cryptography for secure financial transactions. The most well-known cryptocurrency is probably Bitcoin, but there are many others as well. Cryptocurrencies operate on a decentralized network called the blockchain, which means they aren't controlled by any government or financial institution. This can make them appealing to those who value privacy or want to avoid traditional financial systems. However, it's important to note that the value of cryptocurrencies can be highly volatile, so they may not be suitable for everyone. Cryptocurrencies are purely speculative at this point. I recommend only investing what you're willing to lose in this asset and sticking with Bitcoin, especially if you're new to investing. A couple examples of cryptocurrencies are Bitcoin, Ethereum, Binance Token, and Polygon. Number 5, real estate. Real estate is a major asset class. There's single-family, multifamily, and commercial properties that you can own. So, what are REITs exactly? They're a type of investment that allows you to invest in real estate without actually buying physical property. REIT stands for Real Estate Investment Trust, and they're companies that own or finance income-producing real estate. REITs can be a great way to diversify your investment portfolio and potentially earn income through dividends. There are different types of REITs, including those that focus on commercial properties, residential properties, and even mortgages. They can provide exposure to real estate without the hassle of being a landlord. Here are a few stocks that allow you to invest in real estate without owning the physical properties. Realty Income Corp, ticker symbol O, Simon Property Group, ticker symbol SPG, and American Tower Corp, ticker symbol AMT. Number 6. Commodities. I'm sure you've heard this word before being thrown around the news almost daily. Simply, commodities are physical goods that are traded on financial markets, like gold, oil, or wheat. People invest in commodities as a way to hedge against inflation and diversify their portfolio. The value of commodities can be influenced by a variety of factors, including supply and demand, weather, and political events. Some investors like to trade commodities directly, while others invest in futures contracts or exchange-traded funds. Whether you're interested in precious metals, agriculture products, or energy resources, there are plenty of options to choose from. Commodities are basic goods, usually resources that are used in commerce. Commodities fall under 3 categories: agriculture, like wheat, coffee, and corn; energy, like crude oil, natural gas, and coal; metals, gold, silver, and copper. Here are a few symbols you can look into: GLD, which is gold; WTI, which tracks crude oil; and NG, which tracks natural gas. If you've never built a portfolio before and don't know where to start, check out this video here. You will learn all you need to know. In conclusion, the stock market offers a wide range of assets to choose from, including stocks, bonds, and mutual funds. I hope you enjoyed learning about the different assets that are available in the stock market. Whether you're a beginner or an experienced investor, understanding the options available to you is an important step in building a successful investment portfolio. Remember, the stock market can be a powerful tool for creating wealth, but it's also important to do your own research and understand the risks involved. So take the time to educate yourself, and don't be afraid to seek advice of a financial professional if you have any questions. Thanks for watching, and happy investing. By understanding the difference between these assets, you can create a well-rounded investment portfolio that is tailored to your financial goals and risk tolerance. Thanks for watching. I hope you found this video helpful. If you found value here, please like, comment, share, subscribe. Till next time, never give up and stay grinding on your journey to financial freedom. Cheers!